Hey everybody, it's Maddie here with Altcoin Buzz with you on this Tuesday, and I hope you're having a great one. The market is certainly having a great one. We are up 11%, as you can see here, sitting at $236 billion in total market cap. Bitcoin up nearly 13% in the last 24 hours, teetering at about the $8,000 mark. XRP up 17%. Check that out. Bitcoin, in fact, did surpass 8,000 just a few hours ago. And today we're going to do a bit of a different kind of video. We're going to have our take on how to manage your portfolio like a boss. All kinds of positive activity, of course, is happening. And we want to give you our opinion on how to best manage not only your funds, but your expectations, quite honestly. So here's the deal. Not everybody can be an athlete or a bodybuilder, but most people have to eat a healthy diet and exercise in order to keep good physical health and, of course, avoid health problems. Okay, so stay with me. Similarly, if you're not a day trader or full-time crypto investor, it's important that the time you spend on crypto is planned out and that you have a good strategy for it. Everybody has a different appetite for investments and risk management and that kind of stuff. And crypto, being, it's a new asset class and still being in its infancy, is extremely volatile. It's got almost a penny stock nature to most of the coins and projects in this space. Okay, so in this video, we cover some things you can keep in mind before building your portfolio and maybe avoid some mistakes when the mad rush does come in. And the mad rush will come in. We may be seeing the beginnings of it now, in fact. As I covered in yesterday's video about halving, which is going to happen in May of 2020, and it's also a key event for Bitcoin, it will most likely usher in new money and bullishness in the market. So I think now is a good time, pretty much as good a time as any, to start planning and managing your crypto portfolio. And we're going to give you some ways you can possibly categorize your assets. Bitcoin crossing $8,300 does not indicate that we will not go back to the $5,000 level. I hope not, but you know what? It's always possible. Unlikely, but it is possible. But what it does indicate is that there is a change in the trend. It's a signal to the world that the bulls are back. The current run can be attributed to halving in 1 year, consensus 2019, Bakkt approval, and launch timing, of course. We're going to have dips and we're going to have FUD and all that, but it's important to note that we do have some positive momentum for the first time in a little while. Many of you have been through a tough bear market, and preparation now will be key to stopping yourself from running around like a headless chicken from one buyer to another. Quote, "Don't invest more than you can afford to lose." We've said this time and time again. We all know this one, but if you are in the crypto space and want to know some more tips that can help you manage your portfolio, here are some additional suggestions that might help you to manage your crypto portfolio more effectively. So here's a top 10 list of our most important suggestions, starting with number 1, very simply, make a plan. It's very easy in crypto to lose money and gamble away your investment when a sudden opportunity occurs. So ideally, having a small reserve is good and will allow you to avoid dipping into your long-term investments. A plan needs you to keep track of things. In fact, it demands that you keep track of things and demands that you go about your plan and your strategy judiciously and with discipline. Number 2, you must know your risk appetite. You can always modify your portfolio to an expected reward to risk ratio. You should also maintain segregation as per your categories. Fix your plan and try to stick to it as much as you can. So here's an example. Maybe you want safer coins. You want to have a representation of 40 to 60% of your portfolio. Maybe you want high market cap coins as 25 to 35% of your portfolio. Maybe you want low market cap coins at 10 to 20% of your portfolio, the real long shots. Maybe you want a liquidity pool in the form of Bitcoin, Ethereum, stable coins for purchases or trades or even gambling. Maybe that could be 5 to 15% of your portfolio. Whatever it is you choose to do, it's going to be very subjective and it's going to be your choice. But I would stick to that particular distribution. Be disciplined about it. And in the upcoming videos, we will be giving you guys a breakdown and share some of our top coin picks from each of those categories. Number 3, do not invest without doing research. Unless you are gambling, a part of your liquidity pool for quick trades or on some rumor, try not to buy coins or projects you haven't done an analysis for and are aware of the token's utility, team experience, validity of partnerships, market valuation, comparison with crypto or real work competitors. Basically, you want to know all the good aspects, the bad aspects of a project, as well as possible red flags. And in that way, in case anything triggers it one way or another in any direction, you know what your strategy is. If you want to know how to research a project for investment, let us know in the comments below, and we can make a dedicated video on the subject. Number 4, take profits. This is a rule that I've been guilty of breaking in the past. I'll be honest with you guys. An important part of planning is to generate some income and also at least recover back your initial deposit. One good strategy is sell 50% when your investment doubles, or if it moves fast, maybe take out 25% if it were to quadruple. This way, your initial investment is out and all you hold is pure profit. You're only playing with the profit. Number 5, keep an eye on the price. So you got to know when to sell if you plan to be in crypto for a long time. You must still have a price you want to get out at, no matter what. Depending on what you have bought, a potential market cap can be anticipated for each project. If you have made 10 times, 50 times, 100 times gains, at some point it will retrace. At some point it will take a break and investors will cash out because it is still subject to the rules of demand and supply. Eventually there is going to be less demand, so it's important to be happy with the profits if you do want to squeeze those out at some point. Number 6, cut more of your losses than your profits. If you have 20% profit on a project A and 20% loss on a project B, if the likelihood of A going up is equal to the likelihood of B going down, and if you absolutely need to sell, it's better, at least in my opinion, to cut losses and sell B. That's going to be a little bit more debatable and arguable. It's a subjective opinion, but that's how I see it anyway. So again, number 6, cut more of your losses than your profits. Number 7, this is more of a reminder, but venture capital backed projects don't necessarily mean all that much. Always remember that you can possibly do much better research and make better investment choices than many VCs. They have no reason to have your best interests at heart, and they will market and promote the project. And the moment they are done selling, they will move to another without looking back and will abandon you. You may never know at what price the token was sold to a VC, and so the risk for them is usually much lower than yours. So don't look at it as a stamp of validation, and do your own independent research on your own investment parameters. Do not trust the venture capitalists, at least not blindly. Rule number 8 is to follow the trend. Crypto trends change a lot. The parameters you use for creating the basis of your research may require edits, as they may be impacted by the changing trends. New exchange coins may not be a trend in the next cycle. There is a possibility that smart contract-based platforms may not be a huge trend, or maybe high supply coins get more trendy. Whatever. Regardless, keep an eye on the trends with regard to your investments. Number 9, don't blindly follow influencers. Yes, we know we're telling you not to follow Altcoin Buzz's advice, and maybe you should not. You should make your own decisions at the end of the day. We've learned a lot over the last 2 years of running this channel and providing information that we have stopped being extremely opinionated. It took us a while to be slightly more mature, and we will learn more and share more all the time as we continue to grow, because after all, we may have a very different risk appetite from yours. We may have invested at different times, at different levels, whatever. The variables can be quite different. So while it's not a bad idea to be initially informed by some of the influencers out there, don't blindly follow them. And finally for today, number 10, use your time and money wisely. Ever been in a situation where you have an urge to buy a crypto because you heard something bullish about it on a Telegram chat or Twitter? Well, ever invested in the coin only to lose money or get stuck? Nothing sucks more than that, right? So solution, don't FOMO in. It's okay. You cannot catch every train. If you've caught one, you might miss a few others. That's the nature of this space. There are over 4,000 currencies, and you have limited time and money. Some boats are going to sail, some will sink, but be careful about every dollar you spend in the space, because it may seem like a great opportunity to begin with, but may well lead to disappointment and despair. And that's not investing like a boss. So be ready. Planning and being ready beforehand is very important. In the next few days, guys, we're going to be giving you more videos about some very promising investments that we're excited about over at Altcoin Buzz. In the meantime, if you enjoyed today's piece, go ahead, like, subscribe, share, and hit the bell to receive notifications. Best of luck investing on this Tuesday, members of the Altcoin Buzz Army, and we do hope to see you again soon in our next video. Take care.